But when it comes to planning, another metric we have to be very focused on is understanding your marginal tax rate. So when Joe talks about stair steps, stepping on stairs in the tax code, that's your marginal tax rate. What rate are you married to? For us in the current code, as the time of this recording, the bottom's 10%, then there's 12, 22, 24, all the way up to 37. And again, that's going to change over time. And so for us, what bracket are you stuck to, and how do we optimize planning in that bracket? So for example, let's say you are now in the distribution phase of life. You're in that magical 10 to 12% tax bracket stair steps, and how do we prevent you from or keep you reasonably in those stair steps to do good tax planning for year end? Very important stuff. So when you look at the two definitions, marginal tax rate, effective tax rate, both very important. Now, Joe, I will say one thing about the marginal tax rate because it still is confusing for people. So we have families come in and say, oh, Grant, I made $100,000 this year. And I'm saying, great. Is that your total income? Yep, that's my tax rate. Love it. Good news, it's not your tax rate, because what you have to do to get your marginal tax rate, you still have to deduct either your itemized or your standard deduction from that total income, your AGI as they call it on your 1040, and that'll give you your marginal tax rate. So good news, I always look like a hero when I'm bringing their taxable income down when I add the standard deduction, itemized deduction. So those are good key definitions to keep in mind when you're looking at your 1040.